the central bank should be answering questions of why they have maintained the tight regime that they needed to put in place when we had foreign exchange crisis that has now been resolved. Net foreign reserves has moved from less than 4 billion to more than 34 billion, eightfold. So why will they still maintain CRR at 45% or 75% when the foreign exchange crisis had been brought under control?
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition, we look at Nigeria's 2026 Media Economic Review and second half of the year outlook. My guest is Dr. Ayo Teriba, an economist and CEO of Economic Associates. It's great to have you, Doctor, for this conversation, and thank you for availing us the time.
Thank you very much, Otto.
Thank you. Let's first begin with the geopolitical space. First half of the year, it seemed like we had some certainty in terms of the peace deal between the US, Israel, and Iran, where we had some geopolitical tensions. But for now, there's uncertainty over if that peace deal is sustainable. But what's your overview of the global economy and the impacts it will have on the whole geopolitical space, looking into second half of the year, 2026?
From the global geopolitical perspective, there are two global drivers. One is geopolitics, the likelihood that some state actors would overreact and destabilize aspects of the global economy. In 2025, it was Mr. Trump's tariff wars that were ultimately aborted by the courts, and in 2026, it has been mainly Mr. Trump's hostilities with the state of Iran, backed by Israel, which had led to the closure of the Strait of Hormuz since 28th of February 2026. And has created wild volatilities in global oil price, resulting from the blockade of the Strait of Hormuz. And that war, has had a stop and go when they discussed the ceasefire. But that war, in spite of all hopes that it was going to end in June, continues up till now. That's one aspect of the two global drivers, that geopolitics will disrupt economic activities, particularly will disrupt trade flows, which eventually has consequences for GDP growth. And we hope that the hostility will end sooner rather than later. The continued benefit of a stable global financial system means more to Nigeria, than the mild disruptions to commodity prices and trade flows.
Very interesting insights, Dr. Anand. You're just talking about the market capitalization, the dynamics and the shifts, which of course Nigeria must align with. And when we look at Nigeria, you just talked about the fact that there have been reforms and we've been able to navigate. We've seen that the reforms, even the International Monetary Fund, some analysts have acknowledged that these reforms by this administration has been able to deliver very good macroeconomic outcomes for the country. But when you look at the micro parts, the relief for businesses and translating those gains for households, the gaps therein lie. So from your perspective, how can we translate these gains in the macroeconomic reforms to impact businesses positively and improve the living conditions of households?
Okay, so Nigeria's reform had triggered a recovery The onset of the recovery was around December 2024. And that recovery has lasted through 2025 and has remained resilient to the outbreak of hostilities, between the US and Iran. Nigeria can count several macroeconomic gains, including growing reserves, appreciating exchange rate, stable inflation. It had decelerated up to December 2025, and that largely, been sticky at 15%, headline inflation. At some point, the food index had been single digits, and for several of the last 3 months, a growing number of states now enjoys single-digit headline inflation. When you count the macro gains of Nigeria, I've mentioned foreign reserves, particularly net foreign reserves that have grown from less than 4 billion in 2023 to 35 billion. The last time the CBN announced it around February. The exchange rate is stronger right now than it was in December. And then the inflation remaining, stable at 15 point something percent, for 5 months. And the real GDP the growth has been accelerating. Every new measure of GDP tends to be a new peak, compared to the preceding 6 years. So those gains are favorable to Nigeria and favorable to Nigerians. I mean, if your inflation has dropped from 35% to 15%, every Nigerian gains from that. If exchange rate has been appreciating and stable, every Nigerian gains from that. And the stock market also has offered new income, wealth opportunities for the Nigerians who hold equities. So there is evidence, that the recovery has proved resilient in the face of the global oil shock that was triggered by the Iran war.
Doctor, you're among the prominent economists that believe that based on the trajectory of reforms, we should come to that level of a single-digit inflation. Looking at the current inflation rates and whole economic developments, and looking to the second half of the year 2026, are you still firm on that belief that we can achieve a single-digit inflation?
First, we got close to single digits after the rebasing. Before the MBS, as it were, rebased the rebasing. They had announced a headline inflation of 14% for November 2025, only to revise it upward by 3% in December. And they didn't only revise up the 14% in November 2025 to 17%. Our expectation was that the headline should decline from 14% to 12%. But because of that magic 3% that they added, so every month in 2025, we ended up at 15, not 12. So had it not been that, if you like, I never agreed that upward revision of the inflation rate was called for, adding 3 months arbitrarily to all the 12 months. So we would have been at 12% in December 2025, and of course, hope to get to single digits in January or in the first quarter. But yeah, we got that upward revision. So we ended up with 15% after the rebasing of the rebasing, and we had stagnated at that 15% since then. Mostly, since March, that has been due, to the outbreak of the war in Iran that had led to elevated prices for crude oil. And so if that's what has, led to the increase in fuel prices, of course, food have to be transported. So we've seen transportation costs rise and food prices rise in many states. If the war is not going away, we had thought that the war would go with June. But that war seems, to have come back, and there is no, the prospects of a return to, harmony right now, looks very bleak. And so if that volatility of oil price will remain with us for any part of the second half of the year, then unfortunately, we have to wait for that hostility, that disruption at the Strait of Hormuz to be resolved before we can expect significant declines, in headline inflation in Nigeria. That's just the reality. And there's very little you and I can do about whether the war ceases or continues. So I'm afraid it's a dark cloud on the outlook for inflation, not just in Nigeria, but globally, because crude oil still remains a very important input to both production and consumption everywhere in the world.
Doctor, looking at what you've been advocating with the global shifts, geopolitical developments, the need for Nigeria to shift from being income-centric to asset-centric, we have seen that whole term of financialization has not still gotten traction as we expect, even at a time that we need to take advantage of all the shifts we're seeing globally. The Ministry of Finance Incorporated, the Bureau of Public Enterprises have been set up to help unlock value from our public enterprises and assets. There seems to be a slow pace in terms of traction in achieving this. At this time, what is very critical for these agencies, and what role can the National Assembly play to even give some legislative backup to accelerate financialization in our country?
Okay, I will be very careful what I say about income centricism or asset centricism. When you say Nigeria, you have to be careful. I recently had to, caution the IMF representative who claimed he was making claim about Nigeria when he should only have been making claims about the federal government of Nigeria. Because Nigeria, federal government is just, a component of what you describe as Nigeria. Federal government runs a budget, states runs their budget, and local governments run their budgets. So it's the sum of the three that becomes government budget in Nigeria. And even the debt of government is not necessarily the debt of budget of government. It's not the debt of budget of the country, because Nigeria not only has a government sector, we also have a private sector. Their debt matters. The private sector, be they households or companies. So unless you are talking of the aggregate of debts by households, companies, and the three tiers of government, you can't use the word Nigeria. You have to be careful what you say. So in Nigeria, of course, private businesses are financializing, and I would assure you that individuals are financializing their assets. The ascension of Uber, shared ride is a manner of financialization. What used to be devoted to private use in the past is now used, to earn income. That's financialization. And it's not limited to ride hailing. It's also seen in many Nigerians releasing, parts of their real estate for Airbnb. That's financialization. And we mentioned just now, about 15 companies that dominate the Nigerian stock exchange, including banks and manufacturers and telecoms companies. And listing your asset in the stock exchange itself is financialization. And we see, how many companies who are not yet on the stock exchange are announcing that before the end of the year they will come on the stock exchange. The only party, the only important group that is missing from that party is the public sector. So private assets are significantly financialized. You have a couple of Nigerian companies who are listed in both the NGX and in foreign stock markets. So when you say things about financialization, you have to acknowledge that companies are well more advanced in that process, than the public sector. And the key question is, how soon will the public sector in Nigeria join the fray, given that, prominent high-income economies, oil producers like Saudi Arabia had shown very good example in taking their top companies, even football clubs, to the stock exchange. And you've seen India doing it, on a large scale, on a wholesale basis. You've seen Brazil, so India, Brazil, and Saudi Arabia have created online portals, for financializing their assets. And we hope that the Nigerian public sector, which sits on more or less, the entirety of Nigeria's infrastructure assets, which is the bulk of national assets in Nigeria, that the public sector needs to increasingly, financialization simply means, you can divide your total assets into those that are financial assets and those that are non-financial assets. And the difference between financial and non-financial assets, a very simple difference, do we know the market price of the asset? So if we do not know the market price of the asset, it's a non-financial asset. But if we do have a market price for any asset, it's a financial asset. And you can leverage on it for fiscal purposes. Every non-financial asset that becomes financialized simply by establishing the market price strengthens the public sector balance sheet. So right now, the public sector balance sheet is probably at the weakest. It's extremely weak because the only thing that is visible to us are the debts, that the public sector owns, or the debt service that they must pay, which for the federal government is in excess of their current revenue. Okay, if you owe so much debt, what do you own? We established MOFI for that reason. I was in the MOFI restructuring committee. I was in the maiden governing council of MOFI. Our dream for MOFI is to help us to know what we own. And if we know what we own, to financialize, the components of that can be financialized so that we can leverage it, for fiscal purposes, so that it can strengthen our balance sheet. A striking example is that Nigeria, endlessly comes out to make pledges about their plan to borrow to meet obligations to DISCOs, in the power sector, the distribution companies. But we never mentioned the fact that we still own 40% equity in these DISCOs. So the question is, what is our 40% worth? Why are we only discussing borrowing to fund the DISCOs? Why are we not taking those DISCOs, without exception, to the stock market? So we at least establish that there is some financial value to what we own, and begin to do the calculus of whether what we do own in that segment, how it compares with what we owe on account of those DISCOs. That's financialization. It's meant to boost our liquidity, is meant to boost our solvency. So we have a transmission company, we have a national transmission grid. We don't know what it is worth. We have a Nigerian railway service. We don't know what the assets are worth, whether the rail tracks or the rolling stock or the real estate that they sit on. And you point to any Nigerian MDA, whether at the federal or state or local government level. By the time you look closer, they have assets that could potentially, be worth multiples of what they owe. But we only talk about their revenue flows, about their debt. We never talk about what they own. Even Ministry of Defense, they own barracks all over, they own Ikeja cantonment, which is, I don't know which is bigger, out of Ikeja GRA or Ikeja cantonment. But that asset, what's the market value? We don't know. What is it worth? We don't know. We have a Bonny Camp, and we have agencies of government, even the police that owns maybe 2,000 real estate pieces around the country, or NIPOST, 3,000 pieces around the country. And of course, I mean, whether NIPOST or police or the Nigerian army, if you look at the real estate they are sitting on, the real estate that the FCT controls, will look like a joke if you added the ministries of agriculture and you look at the land, or you look at the Ministry of Interior and you look at the land that the correctional facilities are sitting on, in terms of the potential value, the market value of the land compared with the value in use. So you may be using some of those premises for just 1% of what they're worth. And most countries around the world, including United States, India, China, and England, had in the past decade monetized land assets, monetized build structures. And therefore, that's, a way of financializing them to reduce government debt, to boost government revenue. So let's hope, that the Nigerian government, who readily acknowledges, these insights, will take, the step to begin to financialize them. We tried with MOFI. We hope that MOFI, will retrace the steps and act as an asset financializer.
Yes, we wait and see and hope that happens. Doctor, in a few minutes this month, the central bank will be meeting for their monetary policy committee meeting. And of course, current monetary policy rate is 26.5%. But looking to the second half of the year, what would you say in terms of the trajectory of monetary policy regime? Will it be dovish? What do you expect to happen from the monetary policy side?
Well, Nigeria does not have an inflation problem, given that the main driver of the inflation acceleration that we saw in the first 18 months of the current government was weak exchange rate, exchange rate volatility, exchange rate devaluation, passed through to domestic prices. And since the exchange rate became stable and started appreciating, we've seen the inflation decelerate, from 35% to 15%. And it's marking time on 15% in the last 6 months, since December. Yeah, if you look at the exchange rate has also remained stable. So I would still say that as long as the exchange rate remains strong and mildly appreciating, it's sensible to expect that inflation will decline. Nigeria has other challenges, than beside inflation. The central bank was right, when they came in, when the Monetary Policy Committee was constituted, and they held their meeting in February 2024. As of that time, there were multiple crises in different aspects of the economy. There was a foreign exchange supply crisis with less than $4 billion in net foreign reserves. There was exchange rate crisis with multiple exchange rates, which they unified, and the journey towards stability brought a lot of volatility. So it made sense from the foreign exchange crisis perspective for them to tighten. And did they tighten? Oh my goodness. They went to town, and raised the monetary policy rates, from just below 20% to 32%, if you add the monetary policy rate, which peaked at, was it 27, plus 500 basis points in the corridor, in the asymmetric corridor. And apart from foreign exchange crisis, there was fiscal crisis that the Buhari regime had amassed more than 20 trillion in ways and means. So the exchange rate crisis and the fiscal crisis justified drastic tightening. So the Monetary Policy Committee not only tightened the monetary policy rate and the corridor around it, they also tightened the cash reserve requirement, which I thought they met at 35%, but they took to 50% before recently dropping it, to 45%. And on some deposits, we call it non-TSA deposits, 75% CRR. So the question that the central bank needs to answer is not whether they should tighten. Market rates are way below the 26.5% that you're talking about. So if government can issue treasury bills at and FGM bonds at 17 to 20%, what business do we have keeping monetary policy rate at 26.5%? The central bank conducts open market operations at 17 to 20% range. So the monetary policy rate is disconnected from realities in the financial market. I will find it hard to find any other country where the difference between the monetary policy rate and the open market operations rate is more than 25 basis points. But here we are talking of almost 900 basis points, and so the central bank should be answering questions of why they have maintained the tight regime that they needed to put in place when we had foreign exchange crisis that has now been resolved. Net foreign reserves has moved from less than 4 billion to more than 34 billion, eightfold. So why would they still maintain CRR at 45% or 75% when the foreign exchange crisis had been brought under control, when the government is no longer issuing ways and means, and the ways and means had long been securitized, I thought, by the Buhari regime itself before they left. So remove, the barricades, remove the barricades, reduce the CRR considerably, and reduce the NPR, at least to where market realities are. We need to have that conversation. You cannot sacrifice capital project financing on the altar of inflation. If you could, strengthen your regulatory or your supervisory oversight to ensure that the monies that are currently trapped in CRR deposits, zero interest CRR deposits, could be channeled to capital projects financing, both public and private sector capital project financing. It should be in the interest of long-run growth in Nigeria, and it's unlikely to be inflationary. Dangote and the rest of them are going to the stock market to raise money, and they will raise those monies. And some of them raise enough money to fund domestic operations and still find enough money to set aside to invest abroad. And the federal budget, the federal capital projects have difficulty finding funding. And the federal government has increasingly announced loans from this foreign bank and that foreign bank, whether Deutsche Bank or Citibank in UK or the bank in Abu Dhabi. So if foreign bank money is good for federal capital projects, why do you have a 28 trillion, which is more than $20 billion, trapped in zero interest CRR deposit in Nigeria? Does the central bank only only worry about inflation, which threat is not there, unless the naira weakens and devaluation returns? I don't see any significant scope for inflation accelerating.
Thank you very much, Dr. Ayo Teriba, for these interesting insights. as we looked at Nigeria's 2026 Media Economic Review and the second half of the year outlook. Very deep insights around unlocking value from our public enterprise and assets, even as we've seen the impacts of the private sector. The need for central bank to also review its monetary policy rates that is facing the market realities, and also the need for the economy to have more backed up data around poverty and jobs so that we can really see planning impacting positively on the citizens. Thank you once again for the time.
Thank you very much.
Thank you. To our viewers, that will be all for this conversation. If you want to get further insights, log on to our website displayed on the screen and follow our social media platforms to engage. Till we come your way again, I'm Ottoabasi Abasiekong. Thank you for watching and bye for now.